Good evening, everyone. This is Socrates with Tyler Jenks. We are with the Hyperwave YouTube channel and Lucid Investments. We're coming at you today to take a look at the Bitcoin weekly close. Also, some very interesting action that we've seen lately out of the altcoins. And then if we do have time, gold and the S&P 500 are also in very interesting spots. So hopefully we'll be able to get to all of that. But if not, we will be starting with the crypto and specifically looking at the Bitcoin weekly close. And we'll also be taking a look at the Bitcoin market cap dominance, which has recently made a move as the alts have been mostly selling off against Bitcoin. So I've got myself a tasty Montucky cold snack this evening. Just got back in town from a festival. It's been a long weekend for me, but I'm very excited to be here this evening, and we'll be happy to take a look at some charts with Tyler. How are you doing?
I'm doing great. Had a great weekend. Watched some of the best tennis I've ever seen today with Federer and Djokovic, and spent most of the weekend looking at Bitcoin and the alts. A lot of stuff going on, and it's going on right this minute as we're talking. So we'll get right to it. Turn it back to Socrates, and he'll pull up his charts, and I'm going to take a look at some longer-term perspectives.
All right. Going ahead and sharing my screen now. And can't forget to click on my tab there. All right, pulling up some charts real quick. Before I do that, I have got a picture to share with everybody. Was out in Telluride playing the country club out there. Just some of the most beautiful views you'll ever see. If you ever get the chance to make it out there, I couldn't recommend it highly enough. And
wow, fabulous.
It was just amazing. So now we have just made some new local lows. I've been zoomed way in to try to see what in the world is going on here. And let's go ahead and take off all the indicators and zoom it on out to the weekly. Now that is not a good weekly close by any stretch of the imagination. We have been playing around up in here in this 10,000 to 12,000 range for the last couple weeks, trying to do something about this shooting star candle that up in here it looked like we might be able to take it out. But after this weekly close, I am feeling very confident about my the selling that I had been doing in this area, as well as some of the short positions that I had taken out. So this is definitely pointing towards continuation to the downside over the next few weeks, as far as I'm concerned. We did have this shooting star followed by a bit of a hanging man. You'd like to see the body more up here for it to be a hanging man, but still not a very bullish looking candle. Between a hanging man and a spinning top is what I would consider it, both basically reversal candles. So on these two weekly candles, these candlesticks without any other indicators were the two most important technical indicators to me out of everything that I look at. Candlesticks are extremely important to me, and my two most important candlesticks are shooting stars and dragonflies. Those are very strong indicators of a reversal, especially when they are accompanied on high volume, which this thing was. So over the last couple of weeks, I've been saying that if you are just trading candlesticks, you would have shorted on the breakdown here when it confirmed at about 10,250. And you would have put the stop loss at slightly over 14,000, which is just above this wick. And that trade would still be active. It would have gotten a little scary there for a little bit, but everything would still be good to go just based on how to trade the shooting star candlestick pattern. So that is something that I have been keeping a very close eye on. And it has been my single most important indicator for the short and medium term what I'm expecting to see out of the next couple weeks to even couple months, which is what I consider the short to medium term. So let's go ahead and throw on our brand new nifty Lucid SAR, which is the parabolic SAR based on Wells Wilder's original calculations. And the parabolic SAR on the weekly is another one of my single most important indicators to identify medium-term trend. If there's no reversal candles or anything like that, and we break down a weekly SAR in one direction or the other, then that is going to be my most important signal of medium-term trend if there is no big candlestick to go off of. So these are right at the very top of my hierarchy. And we do see that this weekly SAR remains intact. And we can tell that it is right where it should be because it would have accelerated after this last SAR up into here and basically just been broken. But according to Wells Wilder, you cannot put the SAR for the current range into the prior 2 periods range. So the SAR for this candle cannot be above the low for the 2 candles below, since this is a bullish SAR. If it was a bearish SAR, it couldn't be above the candle of the high of 2 candles before. So here we see that this would have accelerated, but since the low of this candle 2 weeks ago was at 96.14, this thing has gone sideways, and it did that in real time right when this opened. That's where this SAR printed, and there is no way that this SAR will move back down this way. So this is a very reliable way for me to basically use stop losses for position trades and also to determine short and medium term counter trend moves. And that is going to confirm what I'm seeing from this shooting star if we can break down this weekly SAR. And this week it is at 96.14. If we do keep that intact, next week it would go up to the low of the candle on July 8th, which would be 10,090. So if we struggle to stay above 9,600 over the next couple of weeks, then this should break, and that is what I'm expecting after seeing a prolonged trend. When they stay bullish for a prolonged period of time, then you should be expecting a reversal, kind of like we saw back in here. It's been trending the same way for a very long time, and then you should be expecting it to get violated as the price continues to move towards it. Eventually that has to happen. That doesn't mean that a big move is going to follow. Like here we see consecutive bearish SARs on the weekly for a long time get broke, but then that was the high. When it got broke here, it had no follow through, and that was essentially going to be a big trap. So when that happens, when you have a long trend get reversed for only a very short amount of time, then that is a very bearish sign. We saw the opposite in the S&P 500 recently, where it was going up and up and up and had the bullish SARs getting really close. It broke it on the downside and then immediately flipped it back to the upside. So when that does happen, that is a very significant indicator to pay attention to. So if we do break this and then in the next week or two break it back to the upside, that would paint a very important picture to me, something like we saw back in here. So this SAR is, I'm just absolutely loving how we're seeing this action, how it's working, how we saw that similar action back up in here where it just was so hard to break it. But once it did, there was a long trend to the other direction. So this will be the next most important indicator to me, and we'll be definitely paying very close attention to that. Real quickly, we're going to throw on the cloud. And look at this thing falling off. This is just incredible. Right here, we can, in this next week, go all the way down to 7,500 and still be long-term bullish based on the weekly Ichimoku cloud. And the weekly cloud is what I use to determine my long-term trends. So seeing that just a couple weeks ago, if we would have pulled back below 96, that would have totally negated this bullish action with the price above the cloud and the bullish Kumo twist. Whereas here it has just dropped straight down. So now we can come all the way back in this week, in the next day even, come all the way down to 7,500, and we would still be bullish based on the Ichimoku cloud. And we were keeping our eye on a potential C clamp to identify a high likelihood of a reversion to the mean. And look at what has been happening. This thing flattened out. When I say this thing, that is the Kijun Sen, and it flattened out while the Tenkan Sen kept accelerating up. And we still see this Tenkan moving up as the Kijun is flat. So that's what we were watching for over the last couple of weeks, noticing that this was accelerating while the Kijun was flattening. That is a recipe for a C clamp. And that is basically what we're seeing right now. That is a significant spread between those two, and that is definitely could get more spread out. But as it looks right now, if we keep pulling back, then this should come towards each other and resolve that C clamp. If it does keep moving up from here, then I would expect that C clamp to exacerbate and indicate a much give me a strong indicator of a reversion to the mean. So here, that is something that is very interesting, seeing not only this cloud dropping off all the way back down to 7,500 this week, but also seeing the Tenkan accelerating away from the price as the Kijun has flattened out. Very, very interesting action right there. So going to go ahead and pull up the 4-hour chart, unless there's anything you wanted to add there, Tyler.
Only that I find it interesting that I've been wanting to buy between 7,500 and 8,500, and all of a sudden we're getting more and more indications that that's a reasonable target. We've got Willie Woo talking about getting back to 8,000, but he believes it'll be over a several month period of time. We've got your analysis now with that flattening out and that C clamp development and that accelerating up over the last week. And then just the fact that both the two numbers, 7,500 and 8,500, were old highs as we came down in the bear market in 2018. And that's the only reason I had picked them out. That was long before these other technical indicators are beginning to zero in on the same area. So I find that really interesting.
I appreciate the input, and that is definitely something that this Kijun is a very, very important level of support. That is what it's designed for, to pick up areas of support. And a Kijun bounce is when the price comes down, tests this area basically on like one candle basis for a very quick amount of time, and then bounces and continues in the uptrend direction. That is very common, will happen time and time again. And that Kijun is currently sitting at 8,600. So let's just take a look back here at when we tested the Kijun in the 2017 bull market. Notice right here, it got within a whisker on the first week of September, almost provided the perfect entry right around 3,000 before taking off to the upside in a big way. Before that, the last time we tested it was July 10th, 2017. Acted as perfect support on a one candle basis for the close and then the open. Just what you want to see there. Again, back in here, comes back, tests the Kijun, can't get all the way back to the cloud because the Kijun is such a strong area of support, and then you get the Kijun bounce. So definitely a very important area to be paying attention to, especially since now it looks like we're back under the Tenkan, seeing that we have failed to bounce from there, or so it appears right now. This could change in a heartbeat. But seeing that is very important and makes me think that the Kijun could be a very good area to go ahead and enter. going ahead and taking a look at my favorite 4-hour chart, and I meant to get together the Wyckoff schematic that I was looking at. Hopefully it won't take me too much time here. I think I got it. Okay, let me get this pulled up 1 second. And pulling this over here. Okay. So this has so far just played out to an absolute T, and is going to be basically the next most important pattern or indicator to me behind that weekly SAR and the weekly candle. So let's go ahead and take a look at just labeling these points once more, because it is a pattern that is working out very well. So point number 1 is going to be preliminary supply. And then point number 2 is where we're going to pull back to or consolidate. Point number 3 gives us the buying climax. You want that to be accompanied on high volume, which this was. And, oh, excuse me, I'm sorry. I am labeling this a little incorrectly. Point 2 is the buying climax we see. They don't label this pullback here. Point 2 is the buying climax. Point 3 is the automatic reaction, which we get after the buying climax. Point 4 is the secondary test. That was the one area that left a little bit to be desired. Never going to be absolutely perfect, so that is quite okay. Point 5 is the lower high that we get after the secondary test, right here and then right here. Now, point 6 is going to come down and test support in phase B. And then point number 7, let's see, I think I will have to put back on the candles for this to remember where I was labeling 7. And I believe that right here was, yeah, this is where it can be a little bit tricky. And I think how I would prefer to do it here is 7 there, 8 here. And this is why I wanted to go through all of them, because once you get towards the end, that's when it's very important to be as precise as possible, because this is when we're going to start to get some signals. So here is the way that I'm inclined to draw it. And we will go ahead and draw in the area of support to the best of our ability there. Okay, so now we've got the point 11 is where I always say to watch out for. That is the best area to cover all long exposure and enter short, according to Wyckoff. And that is going to basically come after we've got point number 9. The reason why this is a little iffy is you want 10 to be a signal of weakness below point number 8. So here we have 10, which is basically dead even with point number 8. So that leaves a little bit to be desired in here, and there is another way to label this, so definitely be very, very careful. It could be that this is only number 8 here, and this is number 7 here. This very well could be the way to put it together, and now we're getting our signal of it's a signal of weakness below this, but not quite below 6, which 8 doesn't have to be. So there is a couple ways that you could still label this, either point number 8, looking for 9 to come all the way back up to 12,777 or so. Or you could be considering that this was 6, 7, 8, 9, and then we get 10 and 11 gave us right here we kind of get the lower high that you want to see. That is so important to me for 11 is a bounce off support that creates a significant lower high when compared to 2, 7, and 9. So when we're looking at 2, 7, and 9, we get this bounce from support that does create a lower high. So that's why I'm inclined to label this as 11 and consider this the first selling opportunity. But I could definitely be swayed based on point number 8 being adjusting those around over here. So that is where Wyckoff can be kind of similar to an Elliott wave or even a hyperwave, where it can be a little bit subjective in terms of how you want to label it, and two practitioners could label it differently, and that is something that you need to be open to and talk to other people about, get input, and not be married with how you're putting it together. I think that's very important for all of these patterns like Hyperwave, Elliott, and Wyckoffs, where they can be fairly subjective. But I do definitely view this as a Wyckoff distribution, and I do think we are at the latter stages where even if this wasn't point 11, that means point 11 should be coming up very soon, and this is something that I would want to be paying very close attention to. And one other thing that I'm going to take a look at before turning it back over to Tyler, get all these deleted, turn this back into candles. Okay, so what I wanted to look at was this channel that I had drawn a few weeks, maybe about a week ago or so. And there was one thing specifically that I wanted to point out. And right here, we had the first signs of this bearish channel occurring back in here. And right here, we were consolidating tightly and expecting a big move. I thought this top end of the channel was going to hold up as resistance and send the price back down to 4 figures back here around July 9th or 10th or so. That's what I was expecting, but I did make an additional sort of line that at the time may not have made sense, but now we can see why I did it. And essentially what I'm going to want to do is just draw a parallel line and connect it to the top of this area here. And that sure is not a parallel line. So let me just, 1 second. And so that's kind of what I was looking at there, was that potentially if this does break through, that maybe this could become the median of a channel. That there was a different exchange where this came up almost perfectly as resistance right here. So this does look a little different than I was expecting, but does kind of go to show that when we had the early signs of this bear channel developing, I was looking at potentially putting the top end of the channel parallel with this and connecting to the high here to indicate where that next area of resistance should be. So that is the next sort of area that I'd be paying attention to, that if we do come down here to correct back to 84, I would be paying very close attention if we get a strong bounce, that either of these trend lines could act as resistance and send us down further. So these will be important to me. And what I'm thinking about right now is that I'm not setting blind orders at the 75 to 8,000 level, where I do think there is strong support. I'm not interested in putting orders in there right now on the books, limit orders that are good until cancel to buy spot Bitcoin. And the reason being is that after a major run-up like we just had, I strongly expect one of two things to occur. I expect the following correction to either be significantly deeper, significantly more, go a lot further than people expect, to bring us back to lower prices than people expect, or I expect it to last for much longer than people expect. So those are the two things that I think are going to happen after such a big move to the upside, is that we're either going to have a much deeper correction than most are expecting, or it's going to take much longer than most are expecting. And I really like Willy Woo's projection of down around 8,000 in like 2 to 3 months. That makes a lot of sense to me because that is longer than most people are expecting. If this thing takes 2 to 3 months to consolidate and correct, then some people are going to really be really worried and not nearly as confident in their long positions. So if it takes longer to get to 8,000 than we expect, or it goes deeper down than we expect, one of those two things I think is going to happen. And it does look like we're breaking down this parabolic advance. And if that is the case, then an 80% correction would be the target based off of this pattern, which would take us back to, let's see here, just approximately, that would take us about to 2,800 or so, which is a very scary number to think about from up here, but that's what I'm expecting. One of two things. It's either going to take longer to consolidate and correct in this area, or it's going to move down harder and sharper and faster than anybody else is expecting, and therefore will make it so that those blind orders are not nearly as attractive to me. So I don't have any blind orders set, but I am expecting to buy this area if it is in a month or two. And if it gets there too quickly, then that's not necessarily something that I'm going to be wanting to buy. So that's everything that I've got. Can I go ahead and turn it on over to you, Tyler?
Okay, very good. I'll pull up a quick chart.
All right, you're good to go. And there we go.
Okay, good. A couple of things jump out at me. I've got my 10,100 line right here and my 11,100 line right here. And this is on a 4-hour chart, but when I look at the longer term, and first of all, I do want to pull up the 8-day. I know Tone doesn't like this very much, but I've been watching it very closely since we got this 9 on it. I can't remember which of our people pointed it out to us in Telegram, but I've been watching it very closely. And it sure enough called the peak, and now we've got a green 1 and a green 2. We have to go back 4 days, and one of the reasons we don't have a price flip even after this tremendous drop is because 4 candles back we've got this huge up move, and so we've got to get through that, but we're working on it right now. So we will see. This is 8 days, so we've got another day to go on that. But if we look at the weekly, you see we just had a price flip on the weekly, even with this big candle, and that's because we've printed a new candle here. And so we had made it all the way up to a 5 and then reversed on that 5 last week, ending an hour ago, and now we're continuing down. This is the 11-1 line. This is the 10-1 line. So Lee and I called this over a year ago, the Valley of Death from Alfred Lord Tennyson's poem, because all the way back here, we tried to get down below both of those, closed above it, tried to get down below both of it, closed above it, opened above it, and then finally closed above it, only to have this tremendous drop all the way down to 6,000, which became the beginning of this tremendous long area of support. So right from the beginning, after we got this spike down to 6,000, after breaking through all of these, look what happened. We go from 6,000, on the next candle get back above 10,100 and 11,100, and then do it again and again and again. And then after finally breaking from that magnetic pole, we ended up on this big move, which I believe was also the move that, no, it wasn't, but this big move that lasted a month and a half took us back from the low sixes all the way back up to kiss that 10-1 again. So I just continued to carry those forward, thinking that this would be a zone or a field that we would have trouble getting through. And so far that has proved to be true, but it becomes useful in a lot of ways. One is all of these very large wicks that were described by Socrates are playing a very big role now. All of them are taking place well above that 11,000, all the way up to almost 14,000, 13,888. But in each case, just letting it all go until this week right here. Now, this week only began 30 minutes ago. So, you know, who knows exactly what's going to happen, but we're sitting at 9,967 right now. So we've got a long way to go to see what's going to happen, and we're still sort of trapped within these boundaries. So that's a couple of things I wanted to point out. The other is, if we go to the daily chart, we've got this setup trend line down here that we tried to get through 2 weeks ago and couldn't quite get down there. I think this is where all the action is going to take place, which is around the 9,500 level. Now, the other thing that's important is these two little dots up here, which are our stop and reverse points. Can you, I haven't put the Lucid on here yet. Can you see if that is correct on your daily?
Yeah, do you want to just take a quick second to put the new one on there?
Yeah, how do I do that?
Click that X by the one that you currently have on.
Yep. Oh no, that's TI. I want this one. Boom.
Yep.
Okay.
Now go click on indicators.
Yep.
And in the search where that magnifying glass is,
Yep.
click type in Lucid.
Lucid Star, magnificent. Okay, let's see if we got any. Yep, same thing. Good. So sometimes we'll see a difference between the calculation. Most of the time we will not. But what was very clear is we saw a tremendously important mistake made by having the wrong calculation with Bitcoin. But anyway, I wanted to point out the fact that this action has now broken the short-term string on the daily basis. And let's take a look at it on the weekly. Same thing as we just saw, that it's still sitting right below that green line and is coming in at 95.87-ish. So I think that 9,500 level, for a number of reasons, is going to be very important. Now we've got this other weird thing going on that some people in Telegram have been asking me about, which is this old phase 2 line. It did cause almost a month long of consolidation below a setup trend line and above and below the old stop and reverse point. Excuse me, the old phase 2 line. Now we're coming back down to it. I'll be very interested if it's an area that can hold. I've got that at about 8,800, 8,900, and I've got the stop or the setup trend line at about the same price, 8,900. Also, though, on the weekly, it doesn't show up as well as on my monthly. On the monthly, I drew this accelerated trend line, which Bitcoin has been remarkable in how it has found support or resistance at these accelerated trend lines, including the phase 4 line of the original Hyperwave. This is, though, drawn on a monthly basis, and I'm talking about a weekly, but this is the monthly one I drew in, which had every one of the major candles in the move from the bottom above it, even though in each case we came down and penetrated barely below it as we were going up. Same thing with the week we're on now, and we don't have the end of the month yet, but we are now below that red line. We've got to wait till the end of July to see if that is broken. And obviously, with the angle that this is going up, we've got quite a ways to go before we can actually get back above it. And right now, for the next month, I put that line somewhere below the 9,000 level. And that's another reason I'm interested in 8,500 to the 7,500 range. I'm not saying that this line is going to act as support, but I'm very interested to see if this accelerated line is going to run into some kind of a problem. Now, the other thing I wanted to look at very quickly is back on the weekly. Are we seeing anything with Copic? And the answer is yes. On a weekly basis now, after having turned at the end of January to the upside, we have now started down. And you'll also notice that there aren't a whole lot of false moves in this thing going all the way back a year and a half. Now, the monthly, which is the one that really counts on the Copic curve, has turned up, and it'll be very difficult for that not to continue up. But the weekly could be a canary in a coal mine. And then I also wanted to look very briefly at the ADX. And the ADX on a weekly, obviously we've broken through the blue line. We still have not taken out this last bottom, but after what we're seeing going on right now, it's not going to take too much before we get lows below lows on that, and then I think we could have even more confirmation about the weakness in this particular thing on a long-term basis, not only on a short-term daily basis or shorter. So with that, I'm very interested to see with what Socrates has come up with in terms of some of the altcoins, if you want to take a look at those now.
Yeah, that would be my pleasure. Let's go ahead and I will send it on over. Okay. Sharing screen. And let's go ahead and take a look at Ethereum. So on the last show, I'll throw on the normal candles. Last show we did would have been on this candle here, July 11th at looks like 20 UTC, and I drew these arrows right here. I was expecting a bounce back up and into a death cross, and then a sell-off down to, I was calling for 247 on July 15th. And it appears as though it has well overshot that target. We are at, got all the way down to 203 on July 15th. So that is a big move to the downside and was very much to be expected. As I had mentioned, these trend lines in specifically Ethereum and Litecoin are pretty much all that you need. In my opinion, what I need when I'm trading Ethereum and Litecoin are trend lines. When there aren't any trend lines, then I'm not too interested in trading it. But that is very, very rare in the sense that this thing just builds trend line after trend line and channel after channel. So we do see that we had kind of a big run up here after breaking this trend line. Even in a bear market, ran from 476 up to over 800 after breaking this trend line. This one broke and certainly was a bit of a trap in the sense that we broke to the sideways and stayed, held horizontal support. That would have been absolutely a buy signal to me. Broke down, oh well. We got another bear trend line, and then after that broke, that was a tremendous buy signal. And when this one broke, I mentioned that I was definitely expecting a big move to the downside. I said I'd be getting out of all of my spot Ethereum in here if I had any left to sell, and that looking to sell a bounce up and into this death cross would be a fantastic shorting opportunity. So it didn't play out exactly as I thought, but it was sure close enough to make me very interested in shorting, and I did go ahead and pull that trigger. Was looking at this consolidation here, forming a bit of a bearish flag. And I was out of town, so I didn't have time to post anything, but I was certainly watching close and wanted to be selling this thing on this breakdown, and was looking on this as things progressed at a profit target of 220 from this bear flag. Maybe could even use the top of that, and it looks like maybe that is where it went down to, even a little bit further. So it does look like that bear flag worked out ideally. And selling this breakdown here, I like to set stop orders under support to go ahead and trigger. I don't have to be at my computer. It's just as soon as price triggers, my stop order, then I will go ahead, that order will go ahead and initiate without me being by my computer. So this was a great example of, if we do bounce up and into the death cross, then this is a tremendous selling opportunity at 280. I had orders set there to sell if it did happen to get up there, and then also had stop orders to sell a breakdown. And that's often how I really like to do it. You kind of cover both ends. Whereas if we bounce here up to 284, then I've got orders waiting to go ahead and sell that. Whereas if we don't and we just break down, well, I've got orders there waiting to sell that breakdown as well. And ideally, I'd get both filled, where this bounces up, fills this order, and then breaks down and fills that order. That's not quite what happened here, but still a pretty ideal situation. And this is really a setup that I have been waiting years for. The altcoins are in a perfect situation to really, really melt down hard. And if you are a big holder or lover of altcoins, then it's something that I would definitely suggest to reevaluate your position. For me, this is something that is tremendously exciting. I've been calling for a pop of the altcoin bubble since 2017, and I've been waiting with a bated breath for it to happen, because I knew in the bottom of my heart that there's no way that this is going to be a sustainable environment with all these alts just continuing to follow Bitcoin. Bitcoin pumps and alts pump harder. There is no way that that is a sustainable situation. And that is something that I've been waiting for, some sort of change in the tides, and we have gotten it. We have gotten it in a big way. And I have been keeping my eye on this ETH BTC chart and saying that I am waiting with my finger on the trigger to sell this thing, and also waiting for this to really call for it to break down. When we were back in here, these green lines were my do or die zone. And I said that if it does and it doesn't die, it decides to do, then it could do it in a big way. Anytime we've tested this and held support, we've gotten a significant bounce. So this was something that I was watching very closely and wanting to say that this thing was done, but waiting for my do or die zone to break down. And it has happened, and it has happened today with a weekly close below. This thing is done. I am calling for ETH BTC to return to 0.0075. And I am confident that we should get there. And I even think we should fall back further. We should get, and this is a pretty, about as bold as prediction as you can get, but I am willing to go ahead and throw it out there, because I do think that there is a pretty darn decent likelihood of getting some action along these lines, where we do get a big bounce off of 0.0075, but then we eventually break down to that next area of support, which is waiting. Let's see, I would do it like this, so it returns to the trend line like that, and then I would go something like that, such that we return to that next area of horizontal support at 0.0018. This is what I am expecting, and I am expecting it in a pretty big way. I think that this, for me, this is the best bet in crypto right now, is shorting this chart. Bitcoin, I'm waiting to see what happens. I am absolutely not going to be waiting to see what happens with this chart. Look at this consolidation period, this huge, huge descending triangle with over a year of consolidating above 0.025. Now it is broken down with a weekly close below. The next horizontal area is 0.0075, and that isn't a big area of support. That is something that I think it will provide a bounce, but not a reversal. I would be expecting a bounce back to test this trend line, and then a big sell-off back down here. So I think that this is a tremendous opportunity to be getting into this, because here's how I'm thinking about it. Bitcoin went up and ETH BTC dumped. Okay, Bitcoin up, ETH BTC down. Bitcoin down, ETH BTC down even more. So that is a situation where I am very comfortable on betting that Bitcoin is either going to go up or down from here. Sure, there is the possibility that Bitcoin just decides to go sideways and all the alts pump in a big way against it. I think that is a very, very low likelihood because this has broken down. And I do think that betting big here is a very attractive option. I have been shorting this in a big way. I shorted at 0.025, and then I added on this action right here. We got similar what we saw with the USD pair. We got this kind of bear flagging setup, which had I had mentioned that right here, I'm expecting a bounce, but any bounce off of here is going to be a selling opportunity because anytime we have bounced, we've created a lower high. That's what happened here. And then right here, we fell into this consolidationary period under 0.024, lower high, lower high, lower high. And that was just the ideal spot to add for me. So went ahead and added there and am very interested in adding on any bounce from here. Now that we have broken down support, I'm expecting a long-term trend that will last for months, months and months and months while this thing dies. I am expecting ETH BTC to crumble from here. And I am excited about that prospect. If the longer that Bitcoin can pull back, I mentioned two things that I think are most likely, that Bitcoin's either going to take longer than most people think to pull back, or it's going to pull back farther than most people think. In either of those situations, alts are going to just dump and dump and dump. That is what I am really excited about and really hoping that we get a prolonged, my ideal situation is we get the 2-month pullback to about 8,000, and over those 2 months, this ETH BTC comes all the way back down to under 0.01. That would leave everybody panicking and flying to safety, and would be a tremendous way to add some fuel to the fire for the next bull run on Bitcoin. So this is very, very exciting. This is the most important thing for me in Bitcoin right now. It's not that Bitcoin is pulling back. It's that alts are finally doing what so many people have been waiting for them to do for so long. And they didn't keep up with Bitcoin to the upside, and now they're dumping harder than Bitcoin to the downside. Think about that. That's huge. Absolutely huge. Okay, taking a look at the market cap dominance, we have gone all the way back up to the 200-week moving average, and that has gotten us back above 69%. This is awesome, back above this horizontal at 66%. Just what I want to see as Bitcoin continues to pull back. If it can continue to gain market cap dominance, that is a big win and tells me that there will be plenty of support from BTC. If it's not from new buyers with USD, it will be from people who are bag holders and alts that will be sending their money back into BTC as the alts continue to fall harder. So that is what is most exciting for me is this chart, the market cap dominance, as well as the ETH BTC pair that just had the weekly close below the do or die area of support that I have been watching so closely. So great stuff from my opinion. What do you have to say, Tyler?
I couldn't agree with you more. I just want to take a minute to talk about the fundamental side of this. Originally, anyone that thought that Bitcoin was different than all of the rest was called sort of laughingly a maximalist. And it took Ugly Old Goat to come out with another way of looking at it, which he called Bitcoin standard bearer. But no matter what you call people that recognize the fundamental difference between Bitcoin and every other project, not most of them, not 90% of them, not 51% of them, but every other project other than Bitcoin in the crypto space, there is a basic fundamental difference between the 4,000 other ones in Bitcoin. Now, there's no way to prove that statement until you see the kind of activity we are now beginning to see. Even then, most people will not accept it because you don't understand the difference. And the difference is very simple. There are no people making decisions at Bitcoin. There are people making decisions for every other project. Now, why does that matter? It matters because since there are no people making decisions, that means that the basic pillars that we've talked about hold true for only one of the cryptos, which is Bitcoin. Now, you can move that around any way you want. You can say, yeah, but what about this coin and that coin? And this one's got a great project, and this has really got some strong utility, and this is... That all misses the point. The point is that if you can change the total supply on the basis of human decision, it is not the same as not being able to do that. That's what a Bitcoin standard bearer stands for. All of the other stuff about unconfiscatability and privacy and scalability and anonymity and fungibility and all of the other attributes, every other project has some of those attributes, but none of them have all of them except for Bitcoin. And if you still don't believe it, just wait, because regardless of where Bitcoin goes from here, we are going to go to zero on all the other projects. That will be hastened if Bitcoin is already on its way to new highs. And it might be. And I'm not saying that I have any idea at this point. I intend to be buying at 7,500 to 8,500, depending on how it gets there. It might not get there. It might hold up at this 10,100 level. Might drop down to 9,500 and that'll be it. There's no way to tell. But I doubt very much if we're going to see it be able to break back below 6,000. My sense is that the 7,500 to 8,500 level has got enormous support. But forget that for now, because we're going to take all of that a day at a time. What you need to focus on is all of a sudden something weird is going on where all of the other projects are falling away from Bitcoin regardless of the direction Bitcoin goes. That's what you've got to focus on. And I want Socrates to pull up Litecoin because we're now only a couple of weeks or 3 weeks away from the halving. And you will see that all of a sudden the previous two cycles that everyone is focused on looks different this time. We don't know yet if it is going to be different, but right now, Litecoin shouldn't be falling like a brick out of an airplane, and it is. Not only absolutely, but relatively to Bitcoin. So if you could pull up a Litecoin chart just for a quick sec, and we've already gone an hour. We do like to talk.
Yeah, we sure do. I'll try to keep this as quick as possible. So yeah, this is where right now is about when I was expecting Litecoin to kind of top. About a month before the halving is where I thought that people would start kind of selling the news. And that's just based on the last market cycle, which is essentially only a sample size of one. So can't be too confident with any prediction with such little history, but I was thinking that the whole market was moving up in a big way throughout most of June, and it looked like Altcoin was providing a nice entry on this pullback down in here. I bought it up and got stopped out shortly thereafter. And then we have been kind of scratching our heads, figuring out, did I get stopped out right before the big, huge pump happens? Or is that big, huge pump not really happening this time like it did last time? And I am now very much inclined to believe the latter. So on the last show, I drew very similar arrows that I did on ETH, expecting a bounce up and into a death cross, seeing a bull div as the price looked like it was breaking down a major area of support that really was painting a picture to me that we should get one last bounce and create a lower high below this as these roll over. And this is much more bearish than ETH in the sense that ETH did get a little bounce and before it rolled over, and this one just hasn't. It's just grinded down. Like the most bearish thing that can happen is when it looks like it absolutely can't keep going down, but it does, and it just grinds down on a daily basis, closing lower every day. That is very bearish, especially when it's at a spot where the price was already oversold and a bounce was to be expected. So when the prices grinds down, that's when it could be in danger of a significant dump. So breaking down 0.01 on the BTC pair and then staying down here is something that is telling me that there isn't much time left for this thing to pump leading into the halving. And since it hasn't done anything since back in the beginning of June, I'm really inclined to think that that was all that anybody was going to get out of it. And now it is just going to continue to sell off and likely come back to test these lows. That is my call for Litecoin, is a return to 0.007 by August 14th, August 15th, right in here. So that is what I will be looking for on LTC BTC. Certainly about as bearish of a perspective as I would expect to see. So we'll go ahead and take a look at the USD pair, and we do see something that is intriguing, that we have pulled back to test this 200-day EMA at $87. So this is a buy signal for me. I'm almost certainly not going to take it, but this is a buy signal, testing the 200 EMA with a bullish cross and a significant spread. This is one that I would be interested in buying if I had any confidence in this thing turning it around from here, which I do not. So I will definitely be passing on this and expecting basically it to consolidate and then get squeezed into a death cross, something along these lines, where it's big bounce to test the 50, smaller bounce as the 50 rolls over, and then a nice squeeze in between these two, and then a breakdown. That's what I would expect to see with these having such a significant spread and the price testing the 200-day EMA for the first time in this whole bull run. Getting something like this would be perfect, where you get this kind of bear flag, almost ascending triangle type of pattern as the EMA rolls over and the 200 starts to flatten out. This would be what I would expect, but wouldn't be necessarily interested in buying here. So definitely something to pay attention to, testing this 200 EMA. That should be good support. We have sold off hard over the last week, and a bounce back to the 100 area makes a lot of sense, but I think it would be nothing more than a really good selling opportunity. And that is what I'm seeing on Litecoin.
That's great. Thank you. Okay. We did not get to the stock market because we were so interested in Bitcoin. So we're going to do that right now. I'm going to just pull up very quickly the S&P 500. We'll take a look at the NASDAQ also and the Dow, all of which are breaking to new highs as of Friday. And let's just start with the S&P. New highs at 3013 on a 5. Got 4 more weeks to go to the upside. My target is 3,300, not on this move, but before the end of the year, which is another 10% higher than we are right here. We're already up 26, 27% for the year. Ignoring the aggressive 13, the sequential 13, the combo 13, just saying adios amigos. We've got 4 stop and reverse points below the last 4 weeks, and we're well above them. Now, a number of people have pointed out that one of the things that Socrates and I talked about is this gigantic 7 on Consensio, 7, 6, 5, 4, 3, 2, 1, which is a massive sell signal. However, that's on the Selgin trading system. All it means is above this 1, we would have put a stop, and that would have been stopped out. Above this 4, we would have put a stop, and that would not quite be stopped out, but very close. Now on this 5, we would put a stop above it. In a very strong move, which this is the definition of, as this was the definition of, you can keep on going and keep on going. You've got to be very careful on 5 and 7 tops using Selgin. And I would not choose to be playing this 2, this 4, or this 5 as tops because of my other system that we've talked about, which is this one. This is the long-term moving average. This is the intermediate-term moving average. This is the short-term moving average. We've got price above all 3, and all 3 are really accelerating up. And you can see the speed with which this long-term is moving up, even relative to the speed that it was moving up over here during the first 2 peaks. It's going up at something like 60 or 70 degrees now, which is just remarkably sharp. Take a look at what the intermediate is doing, even sharper, which simply means that any sort of a pullback in price, which there will be quickly met by the next moving average moving up sharply. And because of that, to me, I wouldn't be playing Selgin at this point. I would be sticking with Consensio. So far, so good, but keep in mind that when this finally gets to where it's going to go, we've got a massive broadening top. And at the same time, without teaching Selgin in a 5-minute period, this was a massive bottom 5, 5, 4, 3, 2, 1. And that means that this 5 is probably still active. We'd have to draw it specifically, not only for the S&P, but for the other indexes to see which ones are still having the stop losses trailing up behind the price. So anyway, I just wanted to point out a couple of things and try to answer that for people that have been asking about why Selgin seems to be giving counter signals. To me, the big thing here is on a measured move basis from here to here, or a measured move basis on this cup and handle, we've got much, much higher prices coming on a technical, just purely on a technical basis. We're not talking fundamentals here at all. I just want to quickly pull up the Dow Jones Industrials, which had been lagging behind and now are exploding above these previous highs. We've basically got a triple top on the Dow that comes in on this candle, and we are only on a 6. We've probably got 3 more weeks to the upside before we have to worry about it. And then I think we just get a 1 to 4 week pullback. This is the NASDAQ, brand new highs only on a 4, the NASDAQ 100, and this is the NASDAQ composite, also on a 4, new all-time highs. So from the stock market point of view, also notice that the setup trend lines were taken out on the NASDAQ composite, the NASDAQ 100. There wasn't one on the Dow, but we had pointed out this inverse head and shoulder before this pullback, and now we are running ahead of that. And same thing on the S&P 500. So all systems go on U.S. markets. In my opinion, our clients are 100% invested in it, minus 10% that is in gold, and we will talk about that in just a moment. But I wanted to see if Socrates wanted to add anything to the stock market picture.
Not really anything to add. Everything is looking very good to me. I'm very much expecting a continuation to the upside. However, I am just taking a little bit of profit here, taking about a third of the position off the table, and then moving my stop loss to break even, which is going to guarantee that I've got a profitable position. And that's something that that's how I like to manage my positions, is essentially if I'm long, wait for a breakout and then take a little bit off the table and move the stop to break even. So that's exactly what I'm doing here. It was struggling right under 3,000 for a while. It kept looking like it was going to punch through, kept looking like it, and failed. And now it finally did. So that is where a lot of people will be expecting strong continuation and might be looking at it as a buying opportunity. We just broke through 3,000, hooray, and it might be. But for me, that's a situation where I start to want to start to protect against risk, and by taking about a third of the position off the table and moving the stop to break even, now I'm in a position where if this thing does really take off hard to the upside, well, great, I've got a good amount of exposure. If it completely reverses from here and pulls back below the prior all-time highs at 29.50 or so, I'm just going off the top of my head. If that happens, well, great. I mean, not great, but still I made a little bit of money, and I managed to eke out a little bit of profit by covering a third of the position and moving that stop to break even. So that really is how I like to manage my positions. Even though I do expect this thing to continue to the upside, it is in a spot where I start to get a little worried about too many people waiting for a 3,000 breakthrough to buy, and then they all buy, and then that marks the top. So this is a situation where I do want to be sure that I'm protecting myself against a big reversal, even though I don't think that it's going to happen. So that is what I'll be looking at on the S&P, and I definitely will be keeping a close eye, expecting it to continue to the upside.
Terrific. And if you don't mind, let's take a quick look at gold. Same sort of action in gold. We know we've broken above a 5-year overhead resistance at the 1360 to 1380 level. We've now held for almost 4 weeks, I believe. Let me see, maybe even longer.
Okay.
Yeah.
So what I am looking at here is this, to me, looks a lot like reaccumulation, and not necessarily a Wyckoff pattern, but from the same vein, in the sense that often a Wyckoff will have a, say, accumulation, markup, reaccumulation, and then another markup. So even though I'm not seeing this as a Wyckoff necessarily, I am seeing this as a markup that went through a major area of resistance. And that's when, right in here, I was not interested in buying, as we're breaking through and smashing through 1400 up to 1440 even. Wasn't interested in buying there, but did say that I would be very interested in adding to my position on a pullback. If we can throw to about 1369, then that could provide an ideal entry. But we didn't really think that that was going to happen, almost because it's too perfect. You have horizontal resistance at 1360 that lasts for years. You finally break through, pulling back to that area to retest it for support, and is almost too perfect. When there's an area that everybody's going to be looking at, it's one that I don't think will happen, that it'll either pull back straight through that and everybody that bought is now underwater, or it will find support before getting back to that area, and everybody that was waiting to buy there is now without position because they were being patient and it never got to their entry. So that's where I was thinking that 1360 would be an awesome place to go ahead and add, but not necessarily thinking it would happen. And now I'm seeing a bit of a tight consolidation. I would want to see volume declining. Looks like we don't have volume on the exchange I'm looking at. So seeing this tight consolidation, which is essentially forming a symmetrical triangle. We've got lower highs, lower highs, lower highs, higher low, higher low. So this is a tight consolidation after a markup that took us through a major boundary. This, to me, looks like a reaccumulation, in the sense that if you bought in here, then you weren't wanting to buy up in here, but now you're very interested because you're seeing support move up and resistance moving down isn't nearly as bothersome, because we are now in a bull market after breaking through a huge boundary. We've spent a significant amount of time above that boundary. So to me, this really looks bullish, and I would really expect it to break to the upside. And if that happens, I think it would be a tremendous buying opportunity. Could even set a stop order, like a stop buy at maybe 1428, maybe even another one at 1421 for 50%, 50%, or maybe just wait for a close back up in here and go ahead and enter. Either way, I think that that would be a great way to do it. If this thing does break down, then that would be a little bit worrisome, absolutely, but it could end up providing that ideal entry that we were originally looking at 1360 or so. So a lot of ways that I can see this thing continuing to the upside, and I'm not very worried about it breaking down to the downside. Keep in mind, I could be quite biased, being that I do have a significant portion of my net worth exposed to gold. So when I am analyzing, you do need to understand that my analysis could be a little bit tinted based on my position. But as it stands, I'm feeling really good about being long this chart. And I am thinking that this isn't even an area where I'm trimming like I did in the S&P. Because this is such a huge boundary that we just made it through, that if this is a real breakthrough, we should absolutely make it back up to 1600, and I would even be targeting significantly higher than that. So it would make sense to take partial profit, but I'm not doing it because this is such a bullish setup that I really do think that it's more of a buying opportunity than a profit-taking opportunity, even though a lot of people were waiting for this 1400 breakthrough. The support moving up is what is most important to me and tells me that the market can sustain these prices. Again, that's just my projection that is going to almost certainly be a little bit biased based on the positions that I have. So before throwing off screen share, did you have anything to add, Tyler?
No, that's great. I agree with that. It's a very exciting chart. There's an awful lot of people that don't believe this chart, including a lot of experts that I respect, that think this was a false breakout. And I think every day that goes by without any sort of a pullback down to that 1380 level is one more chip on the table for the bulls, and we've had a bunch of them here. So we'll see how it plays out. Very exciting markets. The most exciting right now to me is Bitcoin versus the alts, and then hopefully Bitcoin on its own. But that story is still being written at this point. Thank you very much, Socrates. Great stuff. And until tomorrow, where we will look at the market at around 4 o'clock.
Sounds great. It was sure a pleasure, and I will look forward to catching up with you tomorrow to revisit the charts we looked at today.
Okay, very good. Great.